I'm going to start, Jennifer, with you, because you've looked a lot at this question. You coined this phrase, financial health, and what's at stake here? What are you looking for from FinTech to do in order to help promote financial health?
Thanks for having me, Matthew, and for hosting this conversation. So I think this is beyond FinTech. FinTech certainly has a role to play in financial health, but I think this is really about financial services and technology writ large. And it's really shifting to an outcomes focus, to thinking about what business are we really in and what are we trying to accomplish with that business, aside from making our shareholders a lot of money. Because if you're not actually solving a problem for your customer, you're not going to be in business for very long. I think the financial crisis and the resulting recession demonstrated two things. One, that millions of Americans, the majority of Americans, were actually really financially challenged, whether or not they had some kind of established banking relationship, and that a number of financial services companies made a lot of money, not because they were helping their customers with their finances, but in spite of their customers' financial situations. And I think both of those things helped my organization really see that the end goal that I think we all should be aiming for is to be in the financial health business, to be that the value proposition we should be offering to our customers is we're actually here to help you deal with your financial lives, help you manage them, and actually help them to be at least neutral, if not better. And so we spent the last few years developing a set of frameworks and a measurement methodology to say, what is financial health? How would you define it? What are the indicators of financial health, and how would you measure it? We've done surveys nationally. We've worked with a number of financial firms to help them create a baseline measure of the financial health of their own customers and employees. And they're using that data and information to think differently about the products, the tools, the experiences, the end-to-end engagement that they have with their customers, so that their businesses, they can really legitimately say to their customer, I'm actually in business to help you, and I'm only going to make money when I'm helping you with your financial situation.
And so far, I mean, how well is the financial services industry doing by that metric of actually helping its customers have healthier finances?
I think it's a mixed bag, but what I would say is one of the real reasons that there's been such traction in the last couple of years with this idea is because of the rise of FinTech and the recognition that the basis of competition in traditional financial services is really no longer useful. Branch locations, not terribly effective basis of competition when we all have a phone. And price, similarly, most financial products have become commodities, and again, technology and the internet have made that so. So those aren't really going to be the future bases of competition in financial services, consumer financial services. So the question is, what is? And we fundamentally believe that financial health will be that basis. Customers will start deciding where to do business based on whether that company has a good track record of helping its customers be better off. And I think increasingly firms recognize that they've got to figure out a new value proposition in light of the economy and in light of the challenge by the FinTech community, which frankly should do well to be thinking about this exact same framework and an outcomes-based perspective. I think because FinTech companies have the benefit of starting from scratch and often taking a design thinking approach, they are more likely to have started their journey with a real effort around customer discovery and figuring out a pain point to solve and then solving for it. So they start the game one step ahead, but if they're not measuring and thinking about how their customers are doing, they are liable to wind up in the same trap.
So I'm feeling you've set up Dave perfectly. Dave, so talk us through tomorrow, how you came about launching this, what it does, where financial health, that notion,
you bet.
in your thinking.
It really came from the motivation came from building my last company, which was I accidentally created a social media agency while I was doing something else. And we hired about 100 millennials in the course of doing that, and within a few years sold it to Deloitte. And so then everyone starts getting married and having children, and I found myself in all these conversations saying, have you ever heard of term life insurance? Like, it's very cheap. And I templatized all of my estate planning documents and would just bring people to my desk like, let's get a will. Let's fill out a will for these new babies that you have. And when I looked at the data, right now, 3/4 of Americans don't own their own life insurance policy. 2/3 of Americans don't have a will. If you're under 40, so the primary parents of young children, it's 80%. And then a trust outlines how to take care of your children over time, your family over time, and yet only 5% of Americans have them. And so we looked at it and said, well, what if we gave all these things away for free? A will and trust you do completely on your phone in a very social and visual way, make all the decisions and understand them, and create a document that is according to your wishes, the needs of your family, and the laws of your state for a will and a revocable living trust. And then once we understand your family and your finances, we can recommend best fit financial products, acting on behalf of the customer to say, oh, you have kids, you need not as much as I can sell you, but this much life insurance. And then, of course, in the future, other products, so that we can just be there, always helping people either fill the gaps that they don't have or to upgrade what they have. And I think speaking to Jennifer's point, beginning with a business model that's not built on a life insurance agent that's trying to sell to their network as much as they have, which the median age is 59, so no one's selling to young people anymore. And then also just making sure that you don't have a business model that's based on anything that's either predatory or that's going to act adversely against your customers.
So what is your business model based on?
We are committed to building a whole series of free value-added products that are going to help people be financially secure, the first of which is our free will and trust. And then we are a nationwide broker of financial products. Again, as our launch, it's life insurance. So if you happen to buy a life insurance policy, which about 1% of people who install the app actually buy a policy, which is a lot more than we expected, then we make money.
But you feel you're not incentivized to sell?
No, because it's all mathematics. We don't game. We basically take all of the data that you've told us, your brokerage, your 401k, your bank accounts, you sync all of your accounts, and we use mathematics to say this is how much you need.
We all know about mathematics and algorithms.
Well, you could always own the algorithm.
Yeah.
And maybe we should open source that. You can put that in, you can publish that for us and get it critiqued.
Right. I do think that the incentive structure will be important, and the other thing that'll be important is having some standards around the products that you are willing to broker, right? That those would be the two ways to sort of safeguard to make sure the incentives are right.
Absolutely.
So I'm going to want to move very quickly to the audience and have much more of a dialogue and discussion in the rest of this session. But before we do that, Eric, I mean, what does all this, how do you think about all this?
So a couple things. Well, first of all, for those that don't know who USA is, because I've had two people ask me already. So USA, we're a financial services company. We offer a full range of financial services ranging from banking. We actually started in auto insurance in 1922, and as well as life insurance, property insurance. But our focus is on the military and their families. And so that for us has been something back to are we doing it for the right reasons? I'm probably fortunate to work for a company that is mission focused. So our mission specifically states that we're looking out for the financial well-being of our members. And in some cases that means pointing them to products that we either don't have or products that make sense for them to acquire from somebody else. And so for us, that's been fortunate. And I think for us, what we've been looking at is and the importance of helping them make smart decisions are around definitely things like preparing wills and life insurance and things like that, but it's also helping them make very smart decisions every day. Because some of the original things that I think a lot of us from I'll say a legacy financial institution look like or focused on were around loans and car buying and houses, big purchases. But when you've got, I think the latest stat I saw was 57% of the U.S. citizens would have trouble meeting a $500 emergency as of 2017, then you've got to help them, not necessarily with those big purchases, but you got to help them with the point of sale. So are they making the right decision when they're actually at the register and using a credit card or a debit card? Or even before that, can you use data to say, hey, before you walk into Best Buy, let me give you a little text. You don't have to go to our app. Let me give you a little text that says, based off geofencing, that you're $50 away or you're $500 away from your goal of vacation or saving for college or something, because we know, based off your spending habits, that you have a very bad habit when you walk into Best Buy. So hopefully nobody from Best Buy is in here. But those are the kinds of things that I think we have to do different. And I think what we've seen from the fintechs is they've drafted off of what consumer tech has done in creating very engaging experiences. And I think that's our opportunity to learn lessons from that and create engaging experiences as the legacy or the incumbent financial teams.
Now, I suppose we don't think that tech is inevitably a force for good in this respect, because I mean, one of my fears is that you combine a predatory tech firm with the financial illiteracy of so much of the population, and you could find all sorts of ways to rip people off even more effectively than finance has done in the past.
You could. My wife is going to be shocked if she ever sees this, and I'm going to be the optimist here, but I think because of the social realm today versus maybe 20 years ago, that I think those things end up self-correcting pretty quickly. You see what happens even in the market today when somebody does ill. The repercussions of that from a social standpoint tend to be pretty harsh, and I think it cleans itself up pretty quickly.
Do you agree with that, Jill?
Yes and no. I agree completely that when there's ill out there, we know about it faster. But I think there are a lot of ways that whether it's intentional or not, there are bad practices hidden so far deep back in the background that, and there's so much of an asymmetry of information that you, as the customer, really has no idea. Frankly, half the time, the institution in question didn't really even know it either.
That's right.
But I do agree that when it's more explicit, yes, it does tend to get corrected.
And what have you, I mean, Dave, in terms of launching a product like this, I mean, there is it's a tremendous ask in terms of trust. Trust us, to help you write your will, to tell you how much life insurance you should buy and so forth. I mean, how do you approach that? How do you overcome the trust?
I think that
deficit?
the new entrants actually are, more than any time in history, actually have greater strength. Maybe not superior strength to the old brands, but today's millennials, McKinsey study says that 74% of young people do not want to bank at the banks where their parents did. They don't want to be at all the places where maybe you all work, and instead are looking for that new place that will. These are they look at their parents who they empathize with, whose savings was lost, and they blame the institutions and not their parents. And so I think there's an opportunity to come in and see innovations. This is why you see the rise of robo-advisors, who are still just wrapping Fidelity and Schwab in a nice wrapper. But still, they feel like they're more in control and can understand what's going on. For us, we have to be very careful with this. So, we create legal documents that if we shuttered the doors, your legal documents are still legal. They are still, in your hand. You own them, and they're still doing what they said they would do. If you buy an insurance policy, you're buying it from AIG, Prudential, Protective, 6 others that we're appointed to, and so that policy will live on. There's fantastic new upstart full stack insurance companies that I think are doing very innovative things, and I'm very excited for them and look forward to how flexible and interested and engaged the state insurance commissions have been. We'll regulate them. We'll make sure they're secure. The products are superior. The experience is superior, but they don't have 150-year histories or 90-year histories. So I think there's something to be seen. So I think creating the right vehicle that creates that balance, I think, will be very important.
I do think, though, that on this trust issue, it's always interesting at a conference like this how many people get up and talk about how I'm in the business of trust. We should all just say that. This entire conference, everything about financial services and technology increasingly is about trust. And we are living in a time when there is greater distrust among all people for all institutions, and not just government and not just business, even the nonprofit community. And I think that the tech community and by extension, early stage startups have gotten off a little bit easy because of the cool factor and because of it solves a real problem factor. But I do think that technology breaches, issues around privacy, other kinds of issues in that realm potentially have the same effect over the course of time of a reduction in trust. And so I think that we're at a really challenging time in society. That is no one particular institution's fault, but that we are going to have to find ways of rebuilding trust across the board if I think we're going to be successful in helping customers to thrive.
And do you think, I mean, is that actually an obstacle at this point to actually getting the conversation with the public about how to manage their finances better to happen?
Well, I do, although I don't in the sense that I don't think this is about education. I think all the research has shown that sort of traditional financial education doesn't make a difference. Maybe it gives you knowledge gain, but it certainly doesn't it doesn't lead to behavior change, which is I think what we most want for people. Now that doesn't mean people don't need to be smart consumers, know how to shop for a product, know how to ask a good question. But I don't think we're going to educate our way out of this. And the fact is, we all know that we should save more, just like we know we shouldn't eat that dessert at lunch or that we know we shouldn't go shopping for shoes this afternoon. But what we know and what we do are often two different things. But
I guess one of the intriguing possibilities of FinTech is that you can take behavioral economics and,
yes.
and so forth and gamify it into the app or whatever and get people. I mean, as Dick Taylor and
Yes.
Cass Sunstein did with their, pre-commit to save out of your pay rise. I mean, that actually worked very well in terms of getting people to take better savings decisions.
I think you
Yeah,
can
I
also
agree.
use data, though, to understand what triggers them. So for some folks, we found that they're looking for somebody to just be in your face and tell you don't do this. Other folks need a very subtle way, and so I think there's ways that we can learn watch those interactions and learn from them, and tailor those experiences to what we call an experience of one, to where you give me the prompt to do. Of course, I don't buy shoes, so I'm not sure that's not the right. But I don't make a bad move when I walk into a Best Buy versus, hey, I know that you'll make a smart decision. I just want to give you a heads up that this is where you're at right now from your budget.
So you have a kind of drill sergeant in your face option available?
We actually have experimented with that, and believe it or not, there are some that respond very well to that.
What does that look like?
It's actually a...
It looks like the basic training that his customers went through.
Yeah, exactly.
Time.
So it probably strikes a bit of fear in an individual with a nice brown smoky hat too to go with it. So.
Now, who wants to come into this conversation and any questions or thoughts about your own sense of does this metaphor of financial health appeal to you as a better way of thinking about financial services and how it ought to how the customer ought to be seen? In your own, are you seeing technology that's helping or hindering in that respect? We've got a question. Please say who you are.
My question is how do you actually help this happen for people? Because it's mints out there, and how you can share that has really changed people's behavior. Because I think what people feel is this great disorganization towards their finances, and I think they like having someone to speak to, but also they need these tools, these technology tools to help them make better decisions. But I'm just curious to know, can you give some specific examples where it's really changed somebody's behavior?
I can speak. What we've done is we created something we call a financial score, and it's a series of questions, but those questions can be answered over time. What we found up front is we had a whole questionnaire, and it was actually online. It was 10 pages. And we found most folks fell out on page 3 because they're just like, 1, I don't want to deal with the time it takes. 2, I don't like the answers I'm already giving, so I automatically don't want the bad answer at the end, so fine. And so what we found over time is, to gather that data over time. And as we started to collect more and more information, then we get more intelligent about what we can give them. And so we give them a financial score out of 100 at the end and give them some things that they need to go do. And not all of those are save more money. There's actually questions in there that go right to, do you have a will, and do you have simple things like life insurance? And if you don't, go solve those things, and those automatically give you, and my number might be wrong, about a 10-point lift just in those two things. Because you look at that in totality in your financial life and not just how much money do you have for an emergency savings amount.
So I do think that, as you teed up, Matthew, that looking at behavioral economics is going to be very key for all of this. We have written into our terms of service to take all of our data, very rich data about everything about you and your family, to be able to anonymize it and to work with partners, including the Kennedy School and Stanford, to actually understand how people can path through and to actually join with us in experiments about how we actually introduce options and let people choose and what the results of that are. And I think this is going to be key, and it requires a lot of trust on our part. I mean, we do anonymize our data, which is largely just kept encrypted, but we remove all the personal data so that we can then understand what's going on. Small decisions to let people do are key. An overwhelming linear experience, as you just spoke to, is overwhelming and wrong. So that's why when we created our this app, instead of usually when you go and do like an online will or something, it's like TurboTax, like next, 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 and you keep going through. And tomorrow it's all iconography. So you click on your family, you invite your spouse, you send them a text message, they join with you, you add your kids, you watch videos about what does a guardian do, and you either choose a guardian then using the contacts on your phone. You just start typing in M-A-T-O, Matthew Bishop, he'd be a great guardian for my kids. Maybe more of a trustee, and then it actually sends that person a message. So optional, you just opt in. You say, "Hey Matthew, I'm getting my act together, setting up a will. Part of that is choosing a great guardian to look after Max and Mia. If it came down to it, would you be open to that? Here's what's involved." He clicks, sees pictures of my kids, there's little videos, what does guardian do, can sort of tab over and read more, and then he says yes or no. And then he's asked, would you like to do this too? Now, in a world where 80% of young families don't have a will, it's very likely that he hasn't done it either. And so actually building a movement around positive behavior is key to us realizing our mission as well. And you'll see as more features keep rolling out this year that actually creating that societal and community interplay is going to be key to helping people accomplish the microstep.
And what's the initial hook to people?
There's different ones. If you have a kid, the fastest way we get people in is like, do you want guardians for your kids? And what's interesting is the easiest way for us to get people in is with articles like, so you want to take your first vacation without your kids. And that's very motivating for both men and women. So it's really about the understanding the benefits, because really we operate on the theory, there is something called the joy line. And wills, trusts, life insurance, banking, like basically everything that we all care about sits way well below that. But there are things that are up here, such as going to Hawaii without your kid. Or with your kid maybe later, maybe not now. And so finding those attributes. And then, responsibility is one. And then also meeting the needs of specific communities. So tomorrow works for a Leave It to Beaver family, a combined family, same-sex couples of, domestic partnership, marriage, and otherwise, yours, mine, and ours, non-marriage relationships, So being able to make sure that everyone feels comfortable and lead them down the path that says, oh, you're included, this will be easy. And then knowing that it can all change.
So I can tell I'm not a millennial because the idea, I love everything about your tool.
And we love you.
But the thought of asking someone to be one's guardian for one's child, if something bad were to happen in an email or a text, just feels a little like, wow. But yes, I know that's where the world has gone.
Just so you know, 40% of people who are literally just like, hey, do you want to send a text message? 40% say yes.
Oh, I have no, that doesn't
and the average age is 36.
Right. I think that one of the trends that we're seeing, we run a financial solutions lab. Tomorrow is one of our cohort companies. We see hundreds of early stage startups each year. And one of the trends that we just documented in a report we put out was the idea that we're seeing greater specialization in the different businesses and solutions that we're seeing. And this is a great example. This is a very highly specialized example. I think the challenge of specialization and ease with which someone can get in and take action on that thing is that one's financial life is a holistic puzzle. And while I am not remotely calling for a return to the banking of yore, when you lived your whole life in that institution, and so it was very easy to tie the pieces together, there is still the question of how we're going to knit a new quilt together from these various different pieces. Because in an ideal world, we want to optimize people's decision making using data and technology and algorithms. But in order to do that, the more information they have about your life, the better. So I often talk about how the ideal app would be a mashup of the new tools that are enabling you to draw your pay when you've earned it, as opposed to waiting 2 weeks for your pay cycle, right? To help people deal with challenging cash flow, get paid when you want, as opposed to on a pay cycle. Mash that up with bill payment tools that help you figure out when to best pay certain bills. That could then take the calendar for you and just say, well, given how much money you're likely to bring in this month, and given that you have the following 3 bills due, and you have these other expenses coming up, this is what I would propose for when and how the bills get paid, and I'm gonna actually partially pay a couple of them. I'm gonna pay them in a couple different installments, and I'm just gonna then do that for you. You're okay with that? Great, I'll go take care of that. But right now, what do we have? We have an app that really is a bill pay app, and we have another tool that's about getting paid when you want, and some other things.
Are we close to getting there, or?
We have the technology to do that. The question is, how do you do that without then having the 20-page survey document, right? The complex. How do you do it in a simple way and in a way that people trust, and that is that you can hook them into actually wanting to participate in the experience?
I think the trust is probably the bigger deal, because immediately everybody goes, okay, all this stuff amassed in one place, are you going to use that against me? Are you going to use that against me in rates? Are you going to use that against me in fees and other things? And so that's where I think that's the conundrum, is we've got to be able to demonstrate that. So we look at it from the standpoint, you give us a little bit of data, and then what we have to do is return that to you plus interest. And so I think that's the kind of mentality that we got to figure out how to make real for the consumer.
Jacques Chapelain from National Bank of Canada. I really like the example of pushing insights to the client, for example, for your Best Buy example. We're also developing stuff like that, but how has the client or the customer been receptive to that? Because the feedback we're getting is some of them are super positive, some others are like, why are you actually pushing this? There's always this big brother watching me on this. So any success stories on adoption rates, either positive or negative, and what have you learned from that?
So I would tell you, we're still very early, and we're testing and learning our way into this. I had the opportunity to actually go to Australia earlier this year and visit with some of the banks there, and some of the really small banks that are fairly new. The interesting thing that they showed was they are leveraging not just the data, but also machine learning on behavior to go, okay, and the CTO at this particular bank shared with me an example of, he goes down to buy a coffee, then where they're tracking the every time that he swipes that away, and by the third time, if he swipes it away as like, I don't want to know that anymore, that's the interpretation, and they shut that off. And so I think we're going to have to learn our way into all of that. So don't have any concrete examples, but I think that's what we're going to have to do, is watch the behavior on how they deal with those notifications, and not just bombard them with the notifications.
Because it does seem to me, the one way in which my banks tend to be proactively stopping me doing things is paying my hotel bill when I go abroad, because they have these excessively interventionist fraud detection systems that don't actually seem to know anything about me at all. But, do you actually? Do you have hope that this approach can, these sort of stimulating or warnings, or please don't go to Best Buy, go to the library instead, or something, messages? How do you get that right, Jen, to make that? What do we learn from behavioral economics about how you actually get the messaging right, and are we going to know enough about people really to be able to be that effective in introducing.
I mean, one thing that's going to be key is understanding the variety of motivations. So guilt is a motivation. Punishment is a motivation, which is sort of the messages that you've described. Future benefit is a motivation, but it's not a strong benefit. It's hard to attach to it because it's more ethereal. But anything that's goal-oriented, that's affirming, that's reinforcing positive behavior, giving people small decisions that then you can reinforce and support. That's really what's going to create lasting change, and having a bit of an 80-20 rule with the negative reinforcement.
I mean, are you looking to do any social stuff in terms of, posting on Facebook that I've now got a will or whatever, or something like that?
So we didn't do that because it's not very effective, and it's kind of odd signaling for someone. But rather, it's something that you will see come more into the Tomorrow experience with people who are part of your intimate group. So inside Tomorrow, you go on the Family tab, you have your spouse, your kids, your parents, your close family members, your friends, who are all playing a role. Maybe they're a guardian, or maybe they're your pet's guardian, which is a thing. Maybe we have as many pets as kids in the Tomorrow app. Which is there's a lot of nodding heads. And then so that people have different reasons, but they're part of this. This is your intimate social graph. This isn't everyone in your life knowing what you're doing. And so reinforcing savings behavior, college savings behaviors, letting kids know that you have college savings. The data shows that if a child knows that they have a 529 account, they're 72% more likely to go to college than, regardless if there's $20 in there or not.
And do the kids and the wife get to read the will, or is that kept?
I live in a common property state, so the wills and trusts are common and shareable. The trust is united. You can choose who you want to share it with. Of course, you can send it to anyone. Your decisions are private, and you know what your role is and someone else's tomorrow.
My name is Sasha Orleff. I'm the co-founder of LendUp. You mentioned sort of a movement in financial health, which is sort of starting. I was wondering, given the perspectives of everybody on the stage, from a technology company to a bank, and the pioneers of financial health movement, I hope, what does it take? Is there an opportunity for a public-private partnership? What does it take to make a big step function in financial health now?
Yeah, I think that there's the carrot and the stick. I think we need to get very serious about the sticks. My own personal life, I was the poor, starving student who would get 3 overdraft fees on the same day, which is now it's about $135 on average for you would get for those 3. And it's very predatory. If you ever have a chance to do the CFSI empathy program, where you actually go and they drop you off typically in a Hispanic neighborhood, and you buy a prepaid card and you try and send money via MoneyGram, and you realize it'll just make you angry, and know that you need to do something. So from a regulatory environment, from a social movement, we as an industry, the financial industry, are preying on the poor and the weak and those who are new to our country. And that needs to change. On the carrot side, there is such a great opportunity to mean financial health, the bank that actually cares about you, to build a brand that's about optimism, that is pro-customer. There's no reason why you have to be predatory on the poorest in order to build a profitable business. The profit should be linear with the wealth of the individual. And I think that it does require changes in infrastructure, business models, and starting from scratch with that in mind. If you're mission driven, then it's absolutely possible to still make money. And of course, on the public-private side, great partners. And I'm also a 26-year USAA customer. They have everything but my banking.
So Jen, I mean, this was, how would you answer this question?
I think the incentive structures are really important. So how is your frontline staff getting paid? Right? Are they getting paid to push product? Are they getting paid based on how happy people are according to their Net Promoter Score? Are they getting paid based on somehow demonstrating that they're engaging in whatever financial health offerings your institution has, or that you're in some way helping someone make an improvement over time? And that needs to go all the way up the chain. And ultimately, we have to help investors understand why they should want to invest in companies that are actually making money in a way that's sustainable over the long run. But to do that, we're going to need to have a much broader conversation about the role of capitalism in society. So that's like, I think, the really big question. Because I do think this is absolutely about building a better franchise. But this also doesn't work if you only consider the only shareholder you think you understand what I'm trying to say.
Yeah.
The only stakeholder you think you have is your shareholder. I think in the meantime, I think having leaders like these two and others be willing to stand up and talk about what they're doing, I think is really important. And that's what we're seeing within our own network, are companies really saying, oh, I see so-and-so doing it. I mean, let's be real, particularly in banking, there are lemmings. And in the FinTech community, there's a little bit of that. No one wants to admit that, but it all feeds on each other. So I think that the more folks start experimenting and sharing, I think the more pickup you'll start to see.
And just briefly, Dave mentioned this thing you're doing.
It's called FinX, and I think he described it exactly right. It's really an empathy-building experience. We've probably done this now with about 1,000 people over the course of time in a variety of different settings, and it's an opportunity to put yourself in the shoes of somebody who is on their lunch hour and has to conduct a range of financial transactions with maybe a different set of tools and products and with a different context than you might be used to experiencing. And no matter how many times maybe you've mystery shopped for your own company, right? Or maybe you're a product manager and you know this world. It's very different when you actually have to do it. I do think that in this world in general, we could use more empathy, particularly in this arena. It's very difficult to start to think differently about how one runs one's business unless you really understand the experiences your customer's having every day. So it's a very powerful experience.
And Eric, the last word to you. I mean, what do you think needs to happen amongst more established financial institutions to really get them to take this agenda of financial health more seriously?
Well, in addition to looking at the incentive piece, which I agree, I think we also have an opportunity to look at our cost structure. So we're pretty fortunate in that we've always been a direct-to-consumer model, in our case, direct-to-member model, even in our banking world, but even on our insurance side, we started that way with the intent of providing low cost. And I think even today, we can make that transition, and being more on the technology side, compared to where we were 10 years ago, the cost of technology has dropped so dramatically that our ability to serve and still have a profit opportunity off of that, I'll just say, lower socioeconomic consumer is high, just like it is with your more wealthy consumer. And at the end of the day, like we talked about, I mentioned earlier about the number of folks, the percentage of folks that can't even come up with $500. That's what we have to go figure out how to solve for, is not the one percenters, because we'll make money off the one percenters, that won't be a problem, and they have the money to pay for those kinds of services. It's the folks that need it the most, because they will end up in one form or fashion being a burden on everybody else if we don't help them now.